Now we are going to see what are the different kinds of payments, what are the different kinds of expenditure and receipts that we can receive. First, it's capital expenditure. What is capital expenditure? It's that expenditure, the benefit of which we occur for more than one accounting period. For example, we purchase a building. Okay, now building in 1 year, is our all the benefit of building going to be completed? No, right? We're going to receive the benefit of the building for the entire lifetime, or at least for 5 to 10 years. So that is an example of capital expenditure. The money that we invest in these things, then the benefit of which we are going to occur for more than one accounting period. Okay. Next, we have capital receipts. Capital receipts, it's like the receipts that we receive for a specific purpose. If somebody gave us this much amount, x amount, they gave us 5,000 and they told us you can only use this to conduct a tournament, so that is a capital receipt. If they gave us 10,000 and they told you can only use this to distribute prize, that is also capital receipt. And now what is revenue expenditure? Revenue expenditure is the expenditure that we incur to carry out our day-to-day activities. For example, I paid the electricity bill, or I paid for the newspapers or the printing and stationery. So these are my small day-to-day operations expenses. Okay, so these are revenue expenses. Now what is revenue receipts? Revenue receipt, it's the receipts that we receive as income, like interest on investment, subscriptions, entrance fees. Okay, so I mean this was clear from class 11th also. In class 11th we saw whatever amounts we things we put in profit and loss account, that's a revenue receipt and that's revenue expenditure. And whatever we put it in balance sheet, that's liability, that's capital receipt, and assets, that's capital expenditure. Okay, I mean, just do try to relate it with class 11's profit and loss and balance sheet, and you'll be much clearer with the concepts. Okay, so now let us get to the second account that we prepare, that's income and expenditure account. Okay, so we prepared profit and loss account in class 11th. Here we used to write all the items of expenses, and here we used to write all the items of income that we received. So here also we do the same thing, just instead of writing profit and loss, we write income and expenditure, and we write all the incomes here and we write all the expenses here. Okay, yes, that's it, literally, like it's literally the same thing. So it's a nominal account because we write all the income and expenses here, and as we remember the rule of nominal account, debit all expenses and losses and credit all incomes and gains. So here it's a nominal account, and we only write items of revenue nature here. Now in income and expenditure account, if we prepare if we buy a building, we do not write it here. Only if we pay for printing and stationery and all that we write here, and it's only prepared for the current accounting period. Like if we have paid the salary of previous year or the next year, we're not going to include it in this. In this income and expenditure account, we are only going to include the salary that we have paid for this year. Okay, and now look, we wrote all the expenses here, we wrote all the income here. Now whatever is going to be the amount that's going to be left out, it's either going to be surplus or deficit. Surplus means profit, deficit means loss. That's just changed the name as this changed it for income and expenditure, from profit and loss. So like that, only from profit they've named it surplus, and for loss they've named it deficit. See, they say that they do not do it for profit motive, it's for service motive. So they cannot tell that they earned profit, right? So but if they earn more income than expenditure, NP owners, then they tell it's their surplus. And in the same way, if they incurred more losses than the amount that they've earned, they tell it's deficit instead of loss. That's literally it. So now let us see the format. Here we have all the expenditures, here we have all the incomes. Now for expenditure, we can have salaries that we paid this year, but mind you, we'll subtract all the salaries that is not of this year. That's a previous year or of last year, so that we are going to get the salary that is actually of this year. Same with insurance, rent. So we're going to do all the adjustments here in order to make sure that all the items we are writing belongs to this accounting year only. Next to this, printing and stationery expenses, postage and telegram, mobile and telephone, depreciation, we know we put it on capital receipts, like capital expenses like buildings or equipments. And your audit fees, interest paid, loss on sale of asset, honorarium, sports material, refreshment, miscellaneous, all these expenses that we've incurred. Now what are the incomes? Subscriptions are our main income, but mind you, we'll subtract the subscriptions that do not belong to this year. Okay, or we'll add the subscriptions that we did not receive this year but that actually belong to this year. And now entrance fees, sale of old assets, sale of newspaper, rent received, interest received, dividend received, general donation and miscellaneous receipts, these are all our income and these are our expenses. So in this case, our incomes were pretty more than our expenses, that is why we had surplus, which we write here. Okay, but in case our expenses would be more than our income, we would write deficit, that would be here. Okay, is it clear? If not, then do just try to see all these things again and analyze and try to relate it with profit and loss account. I'm sure you'll be much clearer with the concepts. So here next we have balance sheet. Balance sheet is literally the same, like that is for sole proprietor, and now we have it for NPOs. Okay, there's no change in format, nothing except for the fact that there we used to write capital because sole proprietor used to invest it, but here we write capital fund because it's not for trading organization, so we do not see that anybody contributed capital or anybody took capital their home. Okay, so it's basically tells us the financial position of an enterprise in that particular date. What tells us? Balance sheet. So we prepare balance sheet for a particular date and we write all the assets and liabilities in that particular date. Now see, assets is equal to liability plus capital fund. Like there it used to be capital, here it's capital fund. And in the capital fund, we add surplus or we subtract deficit. Just like we used to add a profit and we used to subtract losses. Now here, capital fund is also called as general fund or corpus fund or accumulated fund. Yes, these are the different names given to capital fund. Okay. Now this is like an example of a balance sheet. So first we have the capital fund here, then we add the surplus here. Okay, capital fund, it's the closing capital fund of the last year that we carry forward as the opening capital fund of the this year. Okay, now subscription received in advance, it's a liability for us. Outstanding wages, outstanding salary, because we have to pay them, so it's a liability for us. The building, we less depreciation from it, we get the building amount of this year exactly at this point. Furniture same, sports equipment also same. Now we write all the assets that we have, that includes subscriptions that we are about to receive, prepaid rent that we have already paid, and the cash at the bank balance that we have currently, and all these things we include in asset. And in case our amount of asset at the ending meets our amount of liability, whoa, our entire question is correct, and give yourself like 5 stars, give yourself a treat, I don't know what. Okay, so yes, our main method of doing everything is to get the same amount here and here, and you being an account student already know it, I'm sure. Okay, so now here, like we said, capital fund, so we have many other funds also. Okay, that we did not include in this balance sheet because we know that you do not know about other funds. So first we'll tell you about other funds, then we'll see a balance sheet that includes all the funds also. Okay, so fund based accounting, it's when, like, say if we've received a particular amount, if we've received 5,000 and we are told, okay, you can only create a building out of it, or you can only distribute prizes out of it, or we've set that amount aside ourselves to tell that we'll only use this for this specific purpose, then that we call it as a fund. Okay, we can call it building fund, tournament fund, whatever fund. Okay, now next, it's shown in the liability of balance sheet because you will not use it for any other purpose rather than the purpose in hand, so it's a liability for us basically until that purpose is fulfilled. Next, in case expenses is more, then okay, this we'll understand later through an example, and this also. So for this both, let us see an example for the first case where expenses are more than funds. See, here we are given that we had total match fund. So for match fund, look, we have match fund of 79,000. How did we get 79,000? We had from previous year 24,000, and this year we received donations of 40,000, and this year after conducting the match from tickets we received 15,000. So it all added up to 79,000. But look, the expenses that we incurred on conducting the match was 1,02,000. Okay, now what to do? Our expenses are more than the fund that we had in hand. So from 1,02,000 we can pay 79,000 from the fund that was existing. So we had a fund of 79,000 that we were supposed to use only for conducting matches. So we pay 79,000 out of 1,02,000 for that. So our fund is cancelled. Okay, we used our complete fund, and now 23,000 it's still left. So 23,000 we'll write it in the expenditure side of of income and expenditure account, because it's an expense for this year because we do not have any fund for the remaining 23,000. Okay, so we'll write it in the debit side of income and expenditure account. Okay, so this is how you're going to do everything. Like, generally it's going to be that the expenses, they're going to be deductible from the funds, but in case like this one, if the expenses are more than the funds that we have, so we are going to deduct the amount of expenses that we can deduct from the fund, and the remaining amount we are going to write it in the debit side of profit and loss account. Yes, very good. Now next, balance sheet. Okay, now see, sometimes we have to create a capital fund. Like, say we are given an amount to create a building. Okay, pavilion, it's like a sports ground, it's like a stadium. So if we have to create pavilion, then I can tell it's not expensive. Whatever I created on pavilion, it's going to remain with me. If I invest a 5,000 in building, then what will that money go away? Be like stationary expenses. I used that stationery, so that money went away. No, isn't it? It's going to be there for me. Like that building or that pavilion, it's going to be there with me until the end of this lifetime. So that's going to be a capital fund. Okay, so suppose we had pavilion fund 10 lakh and we received donation for pavilion fund 5 lakh. So now we have a total of pavilion fund 15 lakh, and out of that we created a pavilion of 6 lakh. Mind you, it's not still completely created. We just used 6 lakh to create this year's, okay, pavilion. So now we have pavilion fund left 9 lakh, okay, but this 6 lakhs we're going to add it in capital fund also, naming pavilion in progress, because pavilion is still being made. And now our capital increased from 20 lakh to 6 lakh, because the stadium it's a capital. Somehow we can use this anytime, like this is going to be ours forever. And pavilion is also an asset. So here, whenever we have a capital fund like this and we use it to make a building or a pavilion or anything, we subtract it from the that amount of fund, like building fund or pavilion fund. We add it in capital fund and we add it to the asset side, meaning building in progress or pavilion in progress. So that is it.